Hello, ladies and gentlemen. This is your host once again coming up with Co Speak by R. Today, what we are talking about is something which everybody knows, but very few are actually discussing. And people who are discussing are not actually trying to do something out of it, but they are only discussing. So, there is an implementation phase, and that is the time when we need certain experts to take care of that. We're talking about life, we are talking about behavior, we are talking about education, we are talking about everything. And why are we all doing it? We are not talking about. And to stay in life, we need it. We need money. We need investment. We need wealth. Wealth of different sorts. I know there are multiple wealth we are talking. So today, I want you to interview somebody who is very senior in this particular industry, talking about a lot of these wealth management, investment portfolio, training, coaching, giving all the essence of his life experience to the people worldwide. And I'm fortunate enough sitting next to him. Let's welcome Nishant B, and the co-founder of Nishan Capital. Hi, Nishant, what's up?
Hi, Neeraj. Good. Thank you so much. Thanks for having me here.
Lovely. So, Nishant, before we begin and talk all technical stuff which you are talking about, I'm just telling people that you have been into this for 15 years, close to 11, 12,000 people you have already trained. You're talking about investments, you're talking about wealth management, portfolio management, behavior, coaching, training. You have also written a book like, how to become a public speaker. So you're coming into a public speaking domain as well. You're coaching people to be a public. So I'm sure there are hundreds of other things which you have not mentioned to the people in the front, but you are actually doing. So much of energy, so much of mind. Where is it coming from?
It's such a great question because this reminds me the power of passion, the power of blessings. I proudly say that God has graced me with two of my passion. One is the wealth management. I love to manage wealth in terms of researching markets, global economies, and designing portfolios accordingly. What customers need, how ideally for a customer's objective, the investment or wealth management should happen. So that is the foremost, probably a passion of my life that I have, and I thank God for this. Second is obviously, as you rightly mentioned, I really love to talk about what I do. So I love to train and coach people, bankers, capital market specialist people, about wealth management. So with my 19 years of experience, I try to tell them the what are the right ways to manage wealth, because it requires dealing with the most sensitive part of our life, which is money. So these are the two passions that I have, and as I said that God has graced me, to do these two things, and I really enjoy, doing these two things in my life.
How lovely! How lovely is that? So you see, passion is driving you. That's clearly visible. I'm sure something have driven that passion to get developed. So how you started your journey from schooling to education and then your friend circle and all of that, which driven your passion to wherever you are now. So we want to understand about how was your childhood, how was your education.
Yeah. So I belong to Jaipur, and my the whole childhood was quite humble in terms of my schooling. The whole environment was very humble and very down to earth. Obviously, in the schooling, I used to enjoy performing on the stage. I used to enjoy talking about mathematics. I had a good analytical brain, and that's how I got into engineering. And I started enjoying more about analysis, getting into concepts before telling anything. That really helped me. Now when I got into my masters in Hyderabad, God was so kind that I got into an institute which is I think the finest institution for financial education in India. So from Hyderabad, I did my 2 years of masters, which was mainly into finance, and that 2 year really taught me so many things about financial concepts. Because actually, being a science guy, being an engineer, I was more towards mathematics and analysis. Now, this core background of mathematics and analysis really helped me to learn and to go more deeper into financial things. And then again, by God grace, I got into a financial education or financial services industry. There I got into further more into research, talking to people, talking to clients, talking to bankers on stock market, capital markets, wealth management. And since now this is what almost 18, 19 years back I got into it, and I started loving this whole perspective of capital markets and wealth management, financial markets so much that I one day I knew that I will start my own self, something on my own. This happened in 2019. I started my entrepreneur journey of largely managing people's wealth. And then at the same point of time, as I said, that I used to enjoy talking or speaking on the stage, talking to people and giving them some kind of impart of influence of something good in their life. I got into training and coaching piece also of wealth management, investments, financial planning and all that. So this is how I got into it, Neeraj.
Wow. So the time when people and the childhood, majorly my childhood, where people were running away from mathematics, you were actually loving mathematics. So so this is
True.
something very nice. And then you got into engineering, and then you got into more analytics of finances, and now you are in, the financial analyst of multiple people, of course.
Right.
Now coming to something which is more of understanding, for the people. You talked about capital market, you talk about the trading, you a lot of other things. So somebody who is very new to this, or maybe who's not very fond of investments, and he's very scared about these big jargons, and the markets and graphs and numbers and this, and but they have money, or maybe they wanting to start low, wanting to get started low. What kind of advices, on a very, the very generic coffee table advices which you want to give, not a very high technical advice, but somebody
Yeah.
who says that, okay boss, this is what I have. I'm a salaried guy. I only earn 5-10 lakh rupees, 15 lakh rupees. What kind of investments would you suggest, or what is the the plan or strategy for such people, or maybe the similar to that? How would you cater, or how would you answer to such people or questions on a very basic understanding level?
Great, very, very mindful question. Neeraj, two things are there. The first thing is that first of all, it is important to learn. It is important to start knowing and understanding about finances. It is not about getting into too much nitty gritties. It is about at least we understand how the money has to be managed, right? So the way we are careful about our health, we understand that what kind of diet will help us, what kind of exercise will help us. Likewise, when we talk about wealth, at least we should start understanding about wealth, and how this should ideally happen is through a help of a financial doctor, like people like us who are wealth management specialists who deal into financial markets. When we get these fresh clients, these fresh minds, millennials started who just started earning, the first and foremost thing that I personally do is to first teach them the importance of financial planning. So I first ask them, to answer your question, I first ask them that what are your financial goals. And they a lot of time they are too young, they don't understand financial goal. That we have to explain them that your financial freedom, your early retirement is your first financial goal. Your second financial goal, which would come into the picture, is about your next generation, about your kids education, about a great home, about a great car, about a world tour. So these kind of financial goals are there in each and everyone's life, more or less. Then we have to start planning, to cover up that goal. That if, say for example, I'm 25, started earning 1 year back, I want that I should be financially free by 40. Now we do that extrapolation, that calculation for next 15 years. How much money do we need to generate so that we become financially free as soon as we touch 40? That's an extrapolation analysis that we got into. We get that amount, that this much we have to create as a wealth, as a corpus by 40 years of age in next 15 years. Now, since the goal is visible, I have to start achieving that goal, to reaching out to that goal. For that, we start getting into, start getting them on board through mutual funds, through SIPs, through capital markets, other instruments, so that in next 15 years, taking the huge benefit of compounding, they can create that large corpus. Even the smallest of the amount, if we invest, say a 10,000 rupees per month, if I invest for say next 15 years, I create a corpus of over 60 lakh rupees. 10,000 saving per month is not a big deal, Neeraj. So what I'm trying to say, it has to be very simple to understand. But whenever these millennials, these new guys are talking to their advisors or people like us, they have to ask question, and they have to understand the whole process of compounding so that they get the benefit out of it.
Oh, how nice is that? So majorly what you do is you sit with them, you try and understand what their current scenario right now,
Yeah.
and then you have a goal to achieve. Though, so you set a goal first, 10, 15, 20 years
Yes.
goal, and then
Yep.
you do a reverse engineering of, okay, let's to
Yes.
achieve these goals, these are the 10 things which we need to take care of, and this is the monthly kind of investment we need to do. Okay,
Absolutely.
perfect, perfect. So you also talked about the financial doctor, to make sure that you've been advised properly.
Yep.
So being into this industry, or maybe this in this open world these days, if most of the people claiming to be a doctor but then actually a doctor, and there is a lot of financial risk and security involved every now and then.
Yes.
So
Yes.
looking at the scams, looking at the bank frauds, looking at the cyber crime, and this and that is happening, it is very difficult for people to find out the right doctor to manage the most critical aspect of their life, which is money. So
Yep.
how you advise people to identify the right doctor of finance? What are the traits somebody should have to identify the right guy to be
Yep.
managing their the entire life, because it has been depending on the lot of other stuff in future as well.
Yep.
So what is your
Absolutely.
take on that?
Great. So there are two aspects of it. First one is, the first question that you just asked is about knowing the right financial doctor. So obviously, when you sit with a doctor, when you ask questions, when you sit with any expert for 1 hour, you yourself get to know that what is the gravity of the point that he is talking, what kind of experience does he have, what kind of historical work he has done in wealth management, in investments. And obviously in today's open world, you get to know everything through LinkedIn and other mediums, right? So that is one way to first check the credibility of that particular doctor. Second, obviously, when we discuss things, is he only giving you products, is he only giving you key invest here, or he is getting into your financial planning? See, the products are not important, the planning is important. So that planning has to be there. Now that financial doctor, that individual who is an expert or supposed to be an expert, he needs to understand your financial planning, he needs to figure out your financial goals as with your consultation. Because each and everyone's financial goal of financial freedom amount, the corpus is going to be different. You will have a different financial freedom amount, I will have a different financial freedom corpus requirement. Yeah. So when we discuss with that financial doctor, is he asking questions to understand your financial goals, to understand your assets, liabilities, income, expenses? Is he talking, or is he asking questions on your current portfolio? Is he talking about you covering up your risk also or not? Or is he just giving you that invest this one, two, three places, invest in this new fund, or invest into these insurance plans or ULIP plans? Now, as soon as he does it, there is a red alert, red signal to you that no, you don't have to invest into product. You have to first understand your financial goals, your financial planning. That's how you get to know that if that expert is talking about your financial planning, creating your financial goals, then getting into a calculation that how to create that corpus so that you meet up your financial goals at the right point of time. That's when you understand that you are talking to an expert. You're not talking to a guy who's shallow in knowledge, right? Point number two, that's aspect number one for a financial doctor. Very important point number two, that any instrument which is not regulated has to be absolute no. So if you ask me, stock market, probably greatest of the instrument in India. Bond market, great instrument. Precious metals, say gold and silver in a paper format, great instrument. But if you ask me cryptocurrencies, I'll say worst of the instrument. So if you talk to a doctor and he say invest into cryptos, that's a one red signal to you that no, he's not advising you correctly, because you can't invest into an instrument which is not regulated. If you don't have regulators like RBI or like SEBI, who are there in India, if you're investing into that kind of Ponzi schemes or cryptos and all, you should understand that the advice is not correct and you are talking to a wrong guy.
Absolutely. So that secures people understanding, and that gives them a confidence that it has been managed and overlooked and supervised by government authorities. That means that has been regulated, and this is why it is secure. And
Absolutely.
absolutely, absolutely. Right, right. Now, let's talk about something which is more really, that reminds me, this one incident of if it is not planning, if we are just asking people to just put in here and there. I think I have gone through this myself. Almost 15 years back, somebody asked me to invest in some insurance policy, which
Yep.
is a love term policy. I don't know what it's called. So they asked me to invest around 30-40,000 then, almost 15 years back. It got matured. Out of nowhere, I got an email, which even I forgot. Nobody, keeps that a track of okay, kab kiya tha that way. But fortunately, I got an email somewhere, and
You
they
got
said,
to
"Now
know.
this has been matured. This is matured. Why give us your, the bank details we want to transfer?" So I got to find out, okay, has I really been investing into this? I said, yes, I have a paper of it that got reminded. Then I checked. So the funniest part of it, I I invested 39,000 rupees in total, and I got 41,000 rupees after 15 years.
Right.
2,000 rupees, which I gained, I don't know how. And then I started laughing. My God, brother, if I would have to use this 40,000 rupees at certain good place, that would have become 2 lakhs, 3 lakhs maybe. But just
Easily.
2,000 rupees after 15 years is a no show. It's absolutely, the out of the box program. Now,
Absolutely.
such kind of schemes, these are the legitimate companies. These are I'm talking about somebody called Max, New York Life, or this, that, big companies. And if these kind of instrument, big companies are talking with, playing around with your money, and you're getting peanuts after all of your hard work investments,
Yes.
then it is regulated, it is secure, you are getting investment back, but you're not getting returns.
Returns.
How will you be secure about all this? That's my question to you.
Yes. Great question. Great question, Neeraj. It happens because we invest into a product which was a high cost product. Now, thanks to the regulators in insurance industry, the cost has gone down. But still, let me share a very important thumb rule for the benefit of everyone. Point number one: when we are covering our life, it has to happen with a life insurance policy. Now, that life insurance policy should only cover your life. We should never expect anything coming back from a life insurance policy. Life insurance policy is not investment. Don't mix life insurance plus investment. Never ever have the mix of these two. The right way is life insurance, you should have 10 times of your annual income. Say, for example, if my annual income is say 20 lakhs, my life insurance should ideally be 10 times, which is 2 crore rupees. There's a calculation behind it. So 2 crore has to be my
Oh,
life insurance cover. If anything wrong happens with me, my family, my nominee will receive 2 crore rupees. Now, this instrument has to be only one, which is term plan, because term plan does not give you anything back. If nothing wrong happens with me, I will not get these premium back. And that's how I get these 2 crore cover at a very very cheap price. Now the problem starts happening when we start expecting insurance policy to give us back, right? So very important
you have
thumb
to
rule
survive it.
should be followed always, all the times, and never expect anything coming back from an insurance policy. Insurance policy is not investment. It has to happen, it has to be done only with one instrument, which is term plan. That is the best instrument to cover up your life, and probably the cheapest instrument to cover up life and give you 1, 2, 3, 5 crore kind of a cover. Point number one. Point number two, this same thing can happen with other risk aspect, which is the health. So health insurance has to happen through a family floater health insurance policy or medical claim policy. So if anything happens wrong with my family, if there's any hospitalization, then all the expenses related to the hospitalization, pre-hospitalization, post-hospitalization, ambulance, everything will be covered by the insurance policy. And this will hold true for whole of my family members, for all of my family members. So health insurance has to happen or should happen with a family floater mediclaim or family floater health insurance policy. Now I'm covered with the life, I'm covered with my health. Yeah. Third thing is obviously now investments. Investment should happen in very simple instrument like mutual funds, stocks, bonds, all the regulated capital market thing, which are three. One is stock market or equity market. Point number two is bond or debt market. And point number three is all your precious market, precious metal market, typically gold and silver. If you invest into these three assets, you will never be disappointed if you invest through a long term, and you will never be dished. You will never be betrayed because you are investing into right long term instrument which are regulated.
Nice. So, as you rightly said, the expectation plays a major role here. So, for a life insurance, you should not be expecting money coming out of it. It's securing your life, and then you're actually investing something to come out. That an actual investment.
Right.
Lovely, lovely. Right. Okay. So that gives a very clear insight of, and I like the thought of what you said about 10 times of your annual income should be the cover amount which should you aim for. And we will come to all of that calculations personally when I talk to you. Now in certain scenarios, Nishan, so I wanted to understand a bit more about you know the the company side of it, the B2B side of it. So there are individuals who are running their own self-owned companies, solopreneur, entrepreneur, startups. I'm not talking about big giants or the multi-million dollar companies or maybe the micro companies as well. I'm just talking about the individual freelancers or maybe the consultants, authors, writers, doctors, lawyers, professionals. Now they have two things to look at. There is a personal investment or the growth perspective of investment, and also a business side of it. Though they are the only owner of their business. So there will be two investments which you will be suggesting, but it will be only one thing which they should go ahead with. What is your take on that?
Great, very powerful question, very, very relevant one. Thanks for asking, Neeraj. See, when we invest for individuals, the planning is different, the instruments are different. When we invest for corporates, for non-individual people or non-individual entities, the planning is going to be very, very different. So I give you an example. When I invest for myself, I look at my financial goals. I look at for 10 years, 15 years, 20 years kind of asset and long-term wealth creation. I'll get into equities, some bit of bonds, some bit of precious metals and all that, right? And I'll plan it like that. Now, when I talk about my company may not be able to plan for 15 years, for 20 years, because my company will need money for expansion. My company will need money to open up more offices, So usually a corporate or a non-individual invests not for very long term. And that's how individual will invest into more into equity markets as per their asset allocation, more into aggressive instrument. On the contrary, major part of the portfolio of a corporate will not be into too much aggressive instrument. It is going to be on a conservative instrument, typical like a bond, because for a corporate losing money is very difficult, is a daunting task, because their money the lost money will hamper their growth, will hamper their expansion plans. So the right way is for individual, majority of the money as per the asset allocation of that individual person, will be into aggressive places for long term, so that they can create wealth with the help of compounding. Yeah. For non-individual, for corporates, the money should be invested majorly into less aggressive instrument, kind of conservative instrument, so that capital preservation can happen. Because for individual, capital appreciation is important, but for non-individual or companies, capital preservation, I believe, is more important. And one thing which I really want to add here is that when I speak to a lot of great corporate guys or businessmen, they say, boss, my business gives me 20-25% of margin. Why the hell should I invest? Why should I invest into Indian stock market or mutual funds? I specifically want to highlight, because I've seen n number of example in last 19 years of my career, that if business goes for toss, it should not hamper you and your family's life. I request
Correct.
all of those people who have this kind of thought process, that yes, it is good that you are investing into your businesses. Please create your own wealth, because if tomorrow anything goes wrong with your business, and if your business become redundant, if your business become obsolete, your family or you should not suffer. So if out of 100 rupees that you are making, you want to invest into your business probably 50%, at least remaining 50%, you should invest under your or your family's name, so that you create a corpus, you create a wealth which will help you in rainy days, which will help your family to become financially free.
Lovely. So beautifully said. I like the thought which you said about appreciating and preserving. So as a personal people, as an individual, you should be investing to appreciate the money. And in business, you are investing to preserve the money for
Yes.
the bad times. And then you are taking it as a split to make sure that it is balanced in. I think that's
Yes.
a great insight for people who are listening to this today. I am sure there is a lot to be discussed, but due to the limitation of time, we have to cut down this discussion to here. But
Yeah.
before we end, I want to understand the one liner message for new age investors, youngsters, entrepreneurs, or maybe family, the house makers. What is that one thing which you suggest always as on a very higher side to keep in mind to make a happy, wealthful life? One message.
See, wealth gives you extreme amount of fulfillment. Wealth gives you extreme amount of freedom, and wealth never goes away. Rich people can become poor. Wealthy people can never become, poor. So create wealth over a long period of time. Keep investing for long period of time, and have a fulfilled life, because that's the only way. One day you will feel free. One day you will feel to be working or to be enjoying life only for yourself, not for someone else.
Excellent. So beautifully and so relevant in these area of life these days. You're talking about wealthy and richness, where wealthy is much higher than what we are talking about in the rich people. With this thought, I congratulate you in your own movement of helping people in investment, in making them, life ready for wealthy to become wealthy, and then you are coaching and training and you are hand holding. I think you are doing an excellent, exceptional job. It's just that you need to be more, people should be more coming out to address and find out solutions with the people like you who are trying to drive this. And I request if anybody wants to reach out to Nishant, there is a website nishantbaraya.com. Anytime you can find the link in the description also. Anytime when you want to reach, this is the person, very, very, candid person. I have met him and I recommend very highly if you have any financial advice issues or if you need anything specific regarding the wealthiness or the otherwise just wanted to have a chat over a coffee, you may anytime discuss with Nishant. With this thought, I thank you, Nishant, for being on my show, and it is lovely to be part of this discussion. And I'm sure people have gained a lot of insights in this only 29-30 minutes. uh, and I thank you very much once again to be giving that insight. Thank you so much. And ladies and gentlemen, this is Neeraj, founder RDMR, speaking on Coach Speak by R, talking about a lot of personalities just like Nishan Baraya and more. I thank you once again for being part of this, and I look forward for a new power packed episodes in coming times. Thank you so much. Take care of yourself. Thank you, Nishan.
Thank you, Neeraj, and the whole team of RDM. Thank you so much.